The market thought about slowing down, but it looks like it's changed its mind. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, June 7th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so that you can know how the market is affecting your options as a home seller or buyer. Let's take a look at how the market performed this week. There are now 35 homes that are active on the market, which is down from the 38 we had last week. And the average asking price is about the same, $1,967,000 this week, $1,979,000 last week. 12 homes went pending, 3 more than last week, with an average asking price for those pending sales at $1,791,000, which is significantly lower than the $1,941,000 average last week. And 6 homes closed this week, which is less than last week. And more notably, the average sales price is down significantly from last week, $1,901,000 this week, down from the $2,266,000 last week. So now that we know how the market performed this week, we can look at the broader trends that help us determine where the market might be heading. Before we look at those, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why don't you share it with a friend also? Everyone deserves to be in the know about their local real estate market. Okay, let's look at those indicators. Inventory continues to come back down. It's down 9 homes from the recent peak of 44 we had. And we're currently now on have 35 homes on the market. That is below the typical inventory level we expect to see during this time of year, when more homeowners are typically selling and the buyer pool shrinks a little with the summer vacations. Pending sales have remained strong and have picked up in the past couple of weeks, which is helping keep our inventory low. And the turnover rate is back up comfortably beyond the 100% mark, now sitting at 120% of normal, or what we typically see. This time of year is when we usually see things starting to slow down as people start enjoying their summer vacations. However, with inventory remaining so low, the market continues to move well, and I expect it to continue seeing this amount of activity for the rest of the summer. The over-under number went up again this week also, and to be quite honest, this is not what I was expecting to see. With our turnover rate dropping below 100% in the past few weeks, and inventory being at its peak about 3 weeks ago, I figured we would see this over-under number continue to slowly come back down and settle in the 50,000 over asking range. But it is still sitting well above the 100,000 over asking range, and with our turnover rate rebounding, we might see it stay in this range for quite a while still. The average closing price did continue to come down this week, which is performing more the way in line with what I expected to see. Here's the downward trend line. If you remember, the average asking price for current pending homes that I just talked about is sitting under 1.8 million. Even with the over-under number at more than 100,000, that means that we could see the average sales price fall below 2 million by the end of summer. If that does happen, we'll still be sitting at a healthy appreciation year over year, somewhere in the 15 to 20% range. The tech equities performed well this week, up another 1.6% from last week. The strength of the tech sector will continue to promote a stable and steady increase in market value here in San Ramon, since the majority of the home buyers we see are employed by tech firms. Employed by tech firms. And interest rates dropped back down below 7% this week, but barely. 6.99. That's the national average for the 30-year fixed-rate mortgage now. Nothing major, but as long as the rates kind of float in that 7% range, the more normal it will become and the less week-to-week impact I think it will have on the market. And we're already starting to see that. Of course, the cost of money is still up, but here we are sitting at that 7% range now for almost 2 years. It'll just start to become the norm that people are used to. Of course, the second rates start taking a noticeable dip, I still expect home values to jump up dramatically if and when that does happen. The main thing I think we should focus on this week is the fact that the market doesn't show any real signs of slowing down. It kept looking like that just might happen, but after weathering the typical start of summer slump and having the turnover rate rebound to comfortably over 100%, I think it is safe to assume that the market will continue to move at a consistent rate. This doesn't mean that you can throw your house on the market in any condition and at any price and expect it to sell quickly or for more than you're asking. There are definitely some strategies that still need to be implemented as a home seller to maximize value and sell quickly. But as long as your house shows well and isn't overpriced, I think it's safe to assume that you will get offers in less than a week and still have the potential to get well over your asking price, if priced appropriately. The good news for buyers is that while inventory isn't climbing dramatically, it is also staying comfortably over that 30 house threshold, meaning you are more likely to be able to find a home you will want to spend your hard-earned money on. Thanks for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button down below and ring the notification bell so you can stay informed on how this market continues to shape up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Thanks again for joining me. Have a safe weekend, and I'll see you next week with a new update.